Hello world, welcome to Farm the Market. Back in December 2021, I posted a video titled Thinning the Herd, where I talked about the beating hypergrowth stocks were taking and how this usually just signals the beginning of bigger things to come. Hence the phrase thinning the herd. Like a predator in nature, the market usually goes after the weaker prey first. I thought it would be a good idea to revisit this topic and check out what has happened since. Consider I'm using round numbers, and for today I'm using intraday values, so they could still change. Regardless, the important thing to notice is the general trend. Hypergrowth names continue to suffer, and the market weakness has permeated to big names too. Back in December, the pain was relatively contained to a few names. None of the big tech had corrected by more than 20%, unlike the hypergrowth stocks. If we use RKK as a quote-unquote hypergrowth benchmark, they were already down almost 40% in average. In the meantime, Apple was reaching what at the moment was a new all-time high, and Microsoft and Google were barely below their respective all-time highs. Fast forward to today, and things look much different. Hypergrowth keeps falling, but many big names have fallen more than 20%, and Apple, Google, and Microsoft are getting closer to that 20% threshold too. Apple and Google are at very interesting points in my opinion. Those are the last two stocks from the big tech universe that are still holding the weekly long-term trend. If we look at the weekly chart for each stock, the trend that began with the March 2020 crash is being tested at the moment. If Apple and Google cannot hold and the trends break down, the deterioration of the market conditions will just accelerate. Something to keep in mind. I hope you found this video interesting. Please remember to like and subscribe. Thanks for your time.